All right. Hello, everyone, and welcome to another episode of How I Met Your Mortgage. As always, I'm your host, Adam Smith, with Just the Tips Coaching, and with me, pretty much again, as always, is our marketing director, one of our other coaches, Jen Waybor. Good morning, Jen.
Good morning, Adam.
It is morning where you and I are.
That's true.
It is afternoon, however, where our supposed guest is. And I'll try to drag my feet as much as possible to give him an opportunity to log back on. There are some technical difficulties.
He said 1 second.
He said 1 second. It's been longer
British
than
time.
In British time. Well, you just gave away a clue as to who our guest is. A three-peat guest of ours. There aren't a lot of people that we have on the show multiple times, let alone three.
Right.
But our guest today is your favorite British mortgage broker. I'm hoping I'm your favorite mortgage broker.
Good call.
Okay. We're not going to confirm or deny. But our guest, hopefully with us momentarily, will be your favorite British mortgage broker, Ben Lavender from London by way of New York. And Ben does a bit of isn't that a British bit of mortgage business
Yes.
on the East Coast, and hopefully Ben will join us here shortly and give us a lot of great insight as to what he's been up to and how his business is rolling. I figured a lot of today we would talk about video marketing because Ben's killing it with his video stuff. The videos are hilarious. They're informative. They give us a real insight as to who Ben is, not just what he does, which we know is important. And Ben's also really good at capturing and putting out the outtakes.
Yes, his outtakes are the best.
They're hilarious. And boy, there's just so much video content that we do. And I know we have great outtakes and that eventually we'll have some fantastic outtake reel. But I would say that Ben's ability to put that stuff out there, which again is reinforcing what his audience gets to see about who he is, not just what he does, which is a very big deal. That's so important. I can't even emphasize enough how important it is to make sure that your audience knows who you are and not just what you do. And obviously, video is a great way to do that. So, like this, for example. I know that you have a cat, at least one, because I see it.
Yep.
I know that there's a dog, because Lyric just came in and out. For those of you that don't know, that dog actually belongs to Jen's boyfriend, Matt. And Matt says he's a silver lab. I think he's a Weimaraner, but neither here nor there. And Matt's on vacation on the East Coast as well. Is it a vacation?
Yeah, he's in DC. One of his best friends, that her family owns a vineyard in Virginia. So he's spending a week drinking wine in the greater DC area.
Really? Because if somebody asked me who would take such a vacation, it'd be you.
I went to California with you last week instead.
And didn't see any vineyards.
No, but saw the ocean.
We did see the ocean. Yep, at the Manhattan Beach Pier. We were there for the non-QM conference. And for those of you that aren't directly in our industry, non-QM, meaning non-qualified mortgage, is kind of an alternative lending platform. And there are obviously a ton of products. And the markets that are or have been underserved, that are served best by this, are going to be minorities, people that are immigrants, that have been working, been paying taxes, might have ITIN numbers instead of Social Security numbers, self-employed people where we're going to use alternative forms of income like bank statements instead of the traditional pay stubs, W-2s, tax returns kind of thing. Obviously, a lot of self-employed people are giving the IRS as little as possible. They're paying as little in taxes, maximizing their deductions. And this is a way to still borrow mortgage money without having to pay the IRS more money. Investment properties, this is a big deal, obviously. One of the big influx pieces in the non-QM space is going to be what we've done in the commercial space for years and years, but studying the DSR, the DSCR, the debt service ratio. So can that investment property, now residential investment property, support its own debt? Is it going to be rented out for enough money, or is it currently being rented out for enough money to cover the expense on the property, the mortgage, taxes, insurance, maintenance, management, vacancy, whatever, and then still put a little bit of money into the investor owner's pocket as well. So we look at DSR or DSCR ratios rather than debt to income ratios like we do in more traditional residential lending. So that's pretty much all I have to say about the non-QM conference we attended last week. And maybe we're going to get Ben back.
I asked him if he had an ETA, but he hasn't read it yet. So I don't know if he might be rebooting. He was having some tech issues. Some tech issues.
All right. Well, maybe Ben will join us here shortly. If he does, we'll certainly pepper him on some of the subjects. I think I see Ben joining us. There is Ben.
There we are.
There we are. Okay,
Hi,
so
Ben.
Sorry about that, guys. Sorry about my background. We have weird rules because we're on a company like Zoom thing and whatever. The IT guy's trying to change it, so this is my background for now. Sorry.
I like it.
Well, the last one was fine. That one's fine. I think the majority of people checking us out, listening to you, are actually listening and not watching anyway. At least we hope so. But
so how are you guys? I feel like I haven't seen you, spoken to you forever. What's new?
It has.
I know I'm the guest, but I want to know about you guys.
We're good. We were just talking about the non-QM conference that Jen and I just got back from on Friday.
How was that?
It was interesting. There was a lot of good and a lot of interesting, no question. I'm not going to lie. There were conversations going on around this conference that really sounded like they were taken out of the script from The Big Short.
Interesting.
Yeah. Well, and we all know that Wall Street has a short memory and that greed has no memory. And I do have concerns about what non-QM is doing, what they're up to, what the results are going to be. But I think all in all, the general attitude of it was positive. We certainly want to serve underserved markets, immigrant markets, self-employed markets, these kinds of things.
Kind of like a redlining type, targeting thing. I get it.
Yep, a lot of eliminating that. It's sad that we still have to consider redlining as a problem in the mortgage space and the lending space and the credit space, but we do. But one of the things Jen and I had been talking about, we were talking about you, and what we really like about what we've seen from you in your lead gen activities since the last time we had you on the podcast was your video work. And we all know that video work is uber important, but we think some of the highlights of the video work that you're doing are that they're certainly not boring. They're highly entertaining. They're really giving people some insight as to who Ben is, not just what Ben does. And even better than that, they are informative without being salesy. And even better than that, you're killing it with your outtake stuff.
Thanks, man.
Which is hilarious and gives your audience an even greater insight as to who Ben is and not just what Ben does. Because the mortgage industry, particularly being in the broker world, is pretty heavily regulated. We're licensed heavily. The CFPB, state regulators, local regulators, the mortgage-backed securities market is really dictating rates on and on. So if somebody were comparing you to me to look for a loan, there's probably not going to be a lot of variation in rate and cost.
Agreed.
Now, granted, you should be using wholesale versus retail, a broker versus a banker, if you get the opportunity because of that. But if we're talking about broker to broker, it's not going to be that big a deal. So one of the biggest pieces of the puzzle is working with, I know this is an old phrase, someone you know, like, and trust. And your video work is building that shit in spades. People watch those videos and we know you, we like you, and we trust you because we get to see who you really are.
Well, thank you.
Well, okay.
Yeah, that's basically the idea behind it. I mean, it's, at this point, I'll break down the video stuff. So the majority of my stuff these days that you see like regularly that is posted is are you guys familiar with WowMe?
No. Jen is. Tell us.
Jen is. So WowMe it's a very, very good company in LA who basically you sit down with them for 5-6 hours, you shoot about 18 months worth of content in that space, and they have the scripts for you, they have everything there for you, right? So it's like, that's part of the beauty, is that you just shoot it and it's ready to go, right? And then they just post it for you automatically. Now, part of the problem is that, not necessarily a problem, I'll say this, taking that type of pre-scripted stuff and putting it out there on autopilot is awesome. The problem is it doesn't have what you guys said before. It doesn't have my personality. It doesn't have my silliness because it's scripted, right? So it's great for that. So I'm keeping it, and I'm going to keep doing it because the information is really great. And honestly, even though it's fairly boring information, some people tend to enjoy it. They reach out and they say the content's good. But what I'm trying to do now is put back the kind of the silliness, the Ben's personality to become more approachable. Because the problem is that the overly professional, I am a mortgage broker and LTV and DTI and it doesn't say, hey, I want to do business with you. So I had a video last week. I just got like some new shirts and stuff. I don't know if you guys saw it. And I was just like, it was just a funny 15-second clip, and it got lots of engagement, and it was very funny. So I'm trying to do more of that stuff. So we actually now have an in-house full-time videographer who we're scheduled. So I have him like weekly, and now we're going to start doing TikToks more regularly. So I find that stuff is for me is kind of the next level, is intermingling the professional video stuff along with some silliness. And then on top of it, we've started a podcast here at Madison. So we're going to be repurposing that information as well to get like not just silliness information, but then you've also got actual conversations, and people get to see how you communicate on kind of like a business level. So we're trying to basically do it all and do it all in a way that is scheduled like into my routine. So it's not like, I'm going to do this TikTok if I'm in the mood. I'm going to do this video if I feel like it and the weather's good. It's like, this is business. It has to be done. If you want to keep growing and engaging your audience, you have to be disciplined about it. That's, kind of simple, but it's true.
It is true. Jen actually keeps a full-blown social media marketing calendar so that it stays regimented. And it's funny because I was talking to someone this morning about door knocking, a real estate agent, obviously. And they're looking for tips and tricks on what to do while door knocking. And I said, it doesn't matter. Just be constant and consistent about it, like you should be with all of your activities, whether it's doing good video work, whether it's knocking on doors, and it will work. You will get traction out of it. So, yeah, Ben, you're absolutely right. This is something that has to be regimented. You have to be constant and consistent, unless it's just willy-nilly and you don't really give a shit about growing your audience, your client base, that kind of thing. If you don't care about that stuff, then you guys just go get on TikTok whenever you want.
That's a good point. Yeah, we can.
Right. So yeah, it is certainly uber important stuff. So it sounds like you're doing a lot more in the way of your video work than even Jen and I have seen or suspected. I can't imagine this is where you're devoting 100% of your lead gen time.
It's not. So
what else are you up to?
To kind of go back is that like during COVID, because I'm in New York, right, where we got hit really, really hard, I was working from home February of 2020 until September of 2020. So I kind of killed the videos. It wasn't even a matter of like, sure, my videographer's in another location. I recorded like 3 or 4 myself, but I just let, COVID was difficult mentally and I wasn't as disciplined. There's no excuse. I just kind of let it go. And then since then, so last time I was on here, and this will answer kind of the question, Adam, is that not only did I slow the video stuff down, but I ramped up other parts of my business. So last time I was on here, I had one person on my team. So we were a team of 2. Now I'm a team of 6. So hired 3 more salespeople and an executive assistant who basically just does all my marketing and, scheduling, that kind of stuff. So we have other lead sources that we've been working on. It could be, Facebook leads, Lending Tree. It could just be regular Zillow stuff, basically anything to basically feed and train the sales team so they can generate more business. So despite, I believe that mortgage applications are down year over year, but closing, I'm up about 25-30%, which isn't an amazing number, but compared to that, apps are down.
Right.
It's something that I'm very happy with.
And I would say that that's true. And I attribute it to a better borrower base. I think it's just that we're seeing fewer applications for people who couldn't finance a free trip to the zoo.
Yeah, probably.
I think that's what it is. Because nowadays, when I see an application, odds are good that's somebody who can borrow the money they want to borrow.
So here's a question, because I found that is true for me as well, Adam. And I'm trying to think, is that because our rates, service speed, etc., just attract a higher quality borrower, and we're getting less of, the 500 FICO score, etc. type stuff? Or is it what you're saying? Is that the actual market?
Well, I think there's a combination of both. As you've gone through your career, and don't get me wrong, I do want to come back to how important the pandemic era has been for building up staff and team and systems and so on and so forth. But I think it's a combination of a number of things. I do think that the market has started to bear fruit for more borrowers. Obviously, it was very difficult at the beginning of the pandemic. I do think that your activities are supplementing that as well. But I think one of the big pieces of the puzzle, especially when we're talking about organizations that have strict repeat and referral businesses, where we're not, buying Zillow leads and that kind of crap, is that people are a direct result of the people they spend the most time with. So if you're working with nice, good, friendly, well-qualified buyers and borrowers, then odds are the people that they're referring are also nice, friendly, well-qualified buyers and borrowers. And we know that that process snowballs as time goes on. You have more of them. They refer more of them, on and on and on. So no, I think, Ben, a lot of it should be attributed to how you generate your leads, how you take care of those people once they are conducting business with you, because you like them, they like you, they're going to refer more people that like you, that you like, and I think it just kind of snowballs to a degree where you're going to have fewer shitty applications.
Yeah, and on that note of nicer people, right, I find that a lot of people, again, and this is primarily due to COVID, have very, very short fuses. People are looking for any reason to blow up and freak out. And we all have our own stuff going on in our lives. And of course, we don't bring it to the job, but we're human. And we, mortgage people, I think the majority of us intertwine a lot of our work with our personal, right? So it's difficult to separate the two, but it's something that I've also tried to focus on as well, especially over the last 6 months to 2 years, is working with people that I genuinely enjoy working with, right? If you're a realtor who, freaks out at every opportunity to freak out because you've only got 2 deals in your pipeline and you think being busy and driving everyone crazy makes you a better, harder, hustler or whatever it is, I don't want to work with you, right? It's not because I have so much business I can, afford to throw it away. The reality is that working with that type of individual slows me, my team down, and it results in a poor experience for the consumer. It's not about the realtor, it's about the consumer. So it's something that we're focusing on, not because it's, again, the best thing to do. It's an efficiency thing.
Sure.
If, it's driving
For
crazy,
everybody.
blowing up the phone for no reason, it makes no sense.
Agreed. And just so you're aware, obviously, there's a whole lot of that out there. We know that, the average real estate agent only does X amount of deals a year, blah, blah, blah. We joke about how, this real estate agent is harassing us about this closing because they have to pay their mortgage. Yeah. Right. But there's some truth to that. So there are some things that I'm sure you're doing, and certainly that we've done to keep them in the loop constantly, just some systems in place to keep them apprised of what's going on with the process. And I do work very hard at conditioning these people, and obviously this is my forte anyway, or we wouldn't be here to begin with, that if we need something from you, Mr. Listing Agent, Mrs. Buyer's Agent, I promise we're going to let you know.
Yeah.
We've got it under control. If any of that changes, you're going to be the first to know. You're going to be updated and apprised of where the transaction is at. And please, and this is the most important part, I beg you, rather than spending the time, 10 minutes, 30 minutes every day, checking in on what's going on with a deal you've already captured, a buyer you've already got, a seller you've already got, spend that time finding more buyers and sellers.
Yeah.
Because that's the job.
Yeah. It's so true.
Right. Go. There is no reason for you to worry about us. We're working on a transaction that all of us already have on our books. We're already there. Your job as a mortgage originator, and certainly as a real estate agent, is to generate leads. Spend that time. The amount of time you could spend squeezing a single deal to death that probably wasn't going to close from the start is time you could have found 5 or 10 more deals.
Yeah.
So, yeah, please, let's all stay focused on what's important in that particular space. I think you were actually the first person to breach the public with let's stay in our own lane graphic.
Oh, yeah.
I think that was...
Took me a minute to post that, but I had to.
Okay. And there were a lot of people that weren't willing, so good on you. Absolutely.
It goes both ways. It goes both ways, Adam. And to be fair to the realtors that, we're kind of talking about, it's not every mortgage team runs an operation the way that we do, right? So, for instance, 1 out of 50 mortgage teams will update them and keep them apprised. They're used to having to chase because most of the people in our business don't treat this like a business. It's just, let's do some loans, right? So it's in their defense, yes, but it's really, I think it's about communicating to them, which is, I'm not perfect at it, but I try and do as best of a job as I can in setting the expectations and saying in the beginning of the transaction, each milestone that happens, you will be informed, right? From the beginning to the end and anything else that we need, you will be informed. But I'm not super, super diligent about it. I should do a better job, but I do as much as I can.
It'll come because you can systemize and automate it. Yeah. So we just automatically send out triggers at the point that, hey, we've received applications. So we all know the date on that contract is good. We have requested documents from the borrower. We've sent the disclosures to the borrower. We have sent to file the processing. We've sent to file the underwriting. It's approved. The appraisal's order. It's scheduled. It's completed. It's received. The CD is out. The wire is out. On it. We're clear to close. On and on. And just having those triggers in place, and Jen, you'd probably have a better handle on it than I would, but there are probably a dozen or 15 for the real estate parties.
Yeah, I think there's 15.
15, and then different for the client because the real estate agent knows what goes on in the process. They know we're going to order an appraisal. They know we're going to schedule an appraisal. They know a CD has to go. At least we hope they do.
Yeah, you'd be surprised.
I'm actually not anymore, but yes.
I still got people asking me, Ben, where's the good faith estimate?
Right, the good faith estimate.
Send the
HUD. Hey, David Ryder's probably watching, so yes, David, we know that people do reverses for purchases, and yes, we know that reverses still have a HUD. Okay, so that being the case, we do it very differently for the borrower because the borrower doesn't know anything about this process. Yes. So the triggers that go out to the borrower, those are actually videos, not just copy. The real estate agents get copy, the borrowers get video. We want to solidify that relationship. We want them to learn who Adam is. And it's about what happens next. Hey, we ordered your appraisal. Here's what happens next. We got your application. Here's what happens next. Your closing disclosure has gone out. Here's what happens next. Because the borrower doesn't understand this process. They do it, well, on average, every 5 to 7 years is how often somebody gets a mortgage. And in theory, the real estate agents are doing this, I hope, for all of you out there. You're doing this, 5 to 7 times a week or 5 to 7 times a month. So I guess the truth is most aren't even doing 5 to 7 times a year. So it is a little foreign to them. But that's, Ben, you'll be able to systemize and automate that stuff where you will be able to condition the people who should be spending their time generating leads rather than harassing your team to go and generate leads. And a little bit of education goes a long, long way, right? Ounce of prevention, pound of cure. If we do that with the real estate community and we do it wisely, then in theory, some of the leads they generate will come back to us as well.
Absolutely.
Yeah, Ben gave us a great process. He kept us up to date on what was going on. He gave me the time to go find more buyers. So here I recommend you work with Ben.
Yeah, that's the idea. And I think that's something that a lot of professionals in the business kind of miss. Is that for the consumer, sure, they do it every 5 to 7 years, but the process has changed significantly since 2008 anyway, and it will continue to change every 5, 10 years. So either way, it's new to them, and they probably went through so much trauma, they're trying to forget about it anyway. But, I think taking kind of the Amazon, the Bezos approach into anticipating the consumer's question or issue before they even ask it is so key for 2 reasons. Well, one, it keeps our job or the process smoother for us, right? Because they know what to expect. But something I feel that people don't talk about in this business is the level of home buyer anxiety and stress there is.
It's huge.
It's it's absolutely tremendous, for us, it's, we do it every day. We do so many loans a month, and it's just like, it's just like breathing to us. But to them, it's so stressful. And if we can anticipate their questions up front and do what you just said, send them a video breaking down what's going to happen, it relieves so much more of that anxiety. It makes them more enjoyable to work with from everyone's perspective, not just us. But it also relieves that anxiety and gives them a pleasant experience, as you just said, which will lead to more referrals, more business, everybody wins, frolicking through the meadows type of harmony. But it's true.
It's true. And for those of you watching or listening live or in syndication, know that this is not a difficult process. Do a little thinking and think about what questions do you get asked through the course of your real estate or mortgage process every time. Make a list of those questions. And then script out a video or multiple videos, I should say, answering those questions. And then send the video to your buyers, to your sellers, to your borrowers before the questions get asked. And our best quantitative right now is that it has probably dropped the volume of phone calls related to a specific transaction by 80% in our office. We're saving the time of answering that same question on every transaction over and over because Jen and I were willing to spend a full day in the video studio mapping them out.
Yeah. And out of curiosity, do you recall what your most 3 common ones were?
Oh, that's a really good question. Oh, well, I could probably, it's been a while since we've answered them now, obviously.
Yeah.
But from the lending side, a lot of it is going to be behind the appraisal process. We still come across consumers that want to know what they need to do to order their appraisal, and they don't. Hell, we don't. Right? We currently, thank you UWM from what I understand, but we do currently engage the appraisal management company, or our investor does. And then the AMC engages the appraiser, and we're pretty much hands off until we see the report per the Home Valuation Code of Conduct. So appraisal ones are certainly a very big deal. Questions surrounding disclosures, acknowledging them, signing them, loan estimate, closing disclosure. Those are certainly going to be big ones. Outside of that, what would certainly be most populated? I don't know, maybe the verification of employment process, which has been so robust during the pandemic, because we're verifying employment like it's going out of style, right? We get pay stubs, we get W-2s, we get tax returns, we get a written VOE, we get a verbal VOE. We're probably going to do it again right around closing. You know, we're verifying employment a dozen times. That's a bit of an exaggeration, but over the course of a mortgage process, 2, 3, 4 weeks. So yeah, that one I think feels really daunting to the borrower.
Yeah.
How much verification do you guys really need? I remember at one point a processor early in the pandemic actually yelling at the underwriter saying, "Why don't you just go to the guy's job and give him a COVID test, for crying out loud?"
Yeah.
And it was, we were shifting. We were going into an era where furloughs and layoffs and unemployment were becoming such enormous issues that I was sympathetic to the investor wanting to make sure of the ability to repay. That's what we're here doing, is verifying the ability to repay. That's what QM is all about. So, yeah, I think that's probably one of the big ones. But I've got to be honest with you, Ben, and certainly with everybody that's watching or listening, it changes. We've been doing milestone videos for probably about 5 years. The first series we definitely let run too long. They probably traveled for about 3.5 years before we re-recorded them. And I think at best you're only going to get 18 months out of those videos before the industry has changed so much, the borrower has changed so much that you got to redo them.
Yeah. But that's not bad.
No, it's worth it. If I spend half a day in the studio every 18 months, and granted, there's probably a day's worth of work. Jen, chime in on scripting, because I've got to go to my transaction team, the people that make that magic happen, and I've got to ask them, what are the highlights that you want in these videos? Then we've got to script those out. Then we've got to shoot them. And Jen and I probably re-scripted half a dozen out of 18 the last time we did it, because we just wanted to tweak a few things. So it's, probably a full day or two worth of work every 18 months to nail it down, but I think it's worth it to keep everybody apprised of what's going on in the biggest transaction of their life.
Yeah.
Right?
And it's a small investment for us to make too.
Totally.
It takes a few hours or, a day or two to write all the scripts and everything. But like you said, if it reduces phone calls, and as I'm saying this to the average person, it may sound like we don't want to speak to our clients. It's not like we don't. No. We enjoy speaking, especially the ones who are a pleasure to work with. The point of it is to not have, if they have to call us, that means we're not as efficient as we should be.
And something is stressing them.
Exactly.
They
which we want
answers.
to reach. Yeah. Exactly. So that's what we need more of. That for me, Adam, that's what's next. I've been trying to work that in because as a matter of efficiency, it's like we're at a level where an additional 1, 2, 3, 4, whatever percent efficiency makes a world of a difference and allows us to get to the next level and improve customer satisfaction. That is the goal.
Yeah. Yeah. There's one of my transaction team members chiming in saying appraisal. That's a big one. Yeah, she's right.
Yeah, for us, honestly, the most common question is when clients are escrowing and they're asking about their homeowner's insurance and they're paying it up front, and then it's included monthly in their payments. That is my number one most common question. And it's such a non-stressful question, but it's every single time and very easy to explain.
And just for you and I, it's ingrained. It's like a sixth grader knowing 2 + 2. I learned that 6 years ago. Why are you asking me? I know this.
But to them, why am I paying twice?
Right.
What is this? What's going on? Yeah.
Right. So if I can anticipate the issue, if I can anticipate the question, and I can answer it before it becomes a question, I'm winning.
Yeah.
I'm doing my job. I'm helping to make for a better process, a smoother transaction. I am escalating, improving the client experience. Therefore, everybody involved with the process, the real estate agent, the title company, the insurance company, everybody is getting a better experience if we're willing to put forth that little added effort.
Yeah. And it pays off.
Yeah.
I need more of it.
All right, what great things, I know we're running over, Jen. What great things should we expect from B Lav between now and the next time we reluctantly agree to have you on the show?
I think you will see more of exactly what we've discussed, more of the automation and stuff, which you won't see because it won't be on social, but you'll see more diversity in my social media. You'll see more podcast stuff, more TikTok stuff, in addition to some education and just fun ways of, interacting with our sphere and producing more business along the way. It's not rocket science. It's just, it took me 2 years to finally decide to do it. Watching Gary V, tell us at Fuse, get on TikTok. And I'm just like, I'll give it 2 years. So that's really what's next, guys. That's what's next.
All right.
Simple.
And yeah, Gary's presentation there was eye-opening and scary and right on all at the same time. I would say that that's true. And Ben, I'm really excited to see some of this stuff, particularly as we make for edutainment.
Yeah.
Because you and I live in a boring space. There is not anything sexy or exciting about mortgages. They're not.
Nope.
So to be able to educate and entertain on a relatively boring subject, and Jen, yes, I'll let you talk about our TikTok presenter at the Mile High Mastermind here in a couple of weeks. But to be able to get that kind of entertainment out there on a subject as boring as mortgages, or let's say credit repair, is a big, big deal. So Jen, tell us about that and everything else, and we'll let you take us home.
Yeah, there's a lot to talk about right now. Mile High Mastermind is next week.
It is?
Adam. Next week, next Friday and Saturday. There are still some tickets available. We will be cutting those off any day now. But we have a speaker coming from Arizona. She's actually an LO, but she does all of her TikToks about credit repair. And she has 500,000 followers and around 5 million likes on TikTok about credit repair.
Damn.
So
right. Also, not a sexy subject.
Yeah.
Respect.
No.
Yeah.
Right. Respect.
And then we also have Social Media Day Denver coming up in October, which we'll start talking about more. But we have a former lawyer turned travel blogger who built her business on TikTok. She's coming to speak at Social Media Day Denver. That's October 22nd. But next week, Mile High Mastermind, 2 full days of workshop style content that you can actually implement in your business right away. We're going to tear apart your websites. We're going to teach you how to get published. I'm going to teach you how to use Canva so you can stop posting the same graphics that everybody else is posting. Because every time I send them to Adam and I say, what the hell are these brokers doing? All sharing the same graphic. So we're going to teach you to stop doing that. We're going to teach you how to edit video. It's not that hard. But
I'm guilty of that too, by the way, so thank you.
I'm just going to message you next time, Ben. I'm going to be like, what the hell, dude? But yeah, so Mile High Mastermind next week, September 24th and 25th at the University of Denver. There are a few tickets left. You can text TIPS to 63566 for that link. Also, to get your ticket for Social Media Day in Denver, you can get a copy of my book. You can get all of our video content, our podcast, book a free hour of coaching. There's a lot of info on that Tux code right now. So definitely take a look at that.
Look at that.
But my blur is messing it up. But
Ben's got a white screen, but yeah.
Yeah, all the things.
All the things. All right. Well, Ben, let's get you back on the calendar. No question. We absolutely
Same time
love
next
these
year?
little sessions with you.
November of next year.
I am sorry that we're going to miss
then.
you next week. Enjoy Vegas.
Thank you.
Jen and I were just there as well. That's an interesting town right now. And yeah, that's really about it. Thanks for doing this. I know it's hard to carve this kind of time out on a Monday morning, so I appreciate it.
Of course. Thank you, guys. Always a pleasure.
Yeah. I'm going to run the extra. Don't go anywhere, guys. For those of you watching or listening, thanks for tuning in, and we'll see you next Monday at 10:30 Mountain Time for another episode of How I Met Your Mortgage. Until then, have a great week.